And welcome. Hi everyone, and welcome along to the Sunday market analysis show from Actions to Wealth. My name is Paul B. I am the founder of Actions to Wealth, and joining me this Sunday, as every Sunday, as part of my team, we've got three in today. We've got Julian McCree coming in to do macro market overview. We've got Leka coming in to do trend trading. We've got Orlando to come in and do US dollar. Three really interesting sessions right now. We face at the moment definitely increased and possibly, you've got to say short to mid-term potential for high interest rates. We've got geopolitical issues with the war between Russia and the Ukraine. But it really is a macro markets time. We're going to go straight to Julian McCree and get his take on macro markets and how they're affecting the markets as we go right now.
Hey Paul, thank you for that, and welcome everybody wherever you are in the world to another episode of the weekly market update. So what are we going to talk about today? Well, there is so much to talk about today that what we're going to try and do, I'm going to try and scoot through things as quick as I can. And for those of you that are just listening to me talking about on the Developing Your Edge session that we had just previously to this, it's going to be repeating some of that, but this gives you an opportunity for those who were listening to come in with some questions. Anybody that has anything to ask, please ask away. As always with this is a educational show, and I am, wherever I give what I may consider to be cheap or expensive markets and maybe try and give you an idea about whether the future direction may be, it is for educational purposes only. Whatever positions you take are really your responsibility, and I can't, or anybody else at Actions to Wealth can't be held responsible for any of profits or losses that may occur. That having been said, guys, what are we going to do? So I want to just have a quick run through what I call the Super Six. I'm afraid we don't have time to do cryptocurrencies today, but for those of you that are aware, Ethereum and Bitcoin both bottomed recently. For those of you that are also aware, if you're trading crypto, you know that we're at a major resistance point just coming up below that 3,000 level in Ether. And as a result of that, is it a new trend or is it just a bounce to a sell zone? So I will leave you to make those conclusions, but please do that technical analysis work just to get a feel for it. Maybe one of the other presenters who's going to follow me may be able to develop that in more detail. I'm going to look at these markets that you see in front of us really super quickly, because there's a few to go through. So here's my overall FX outlook. The euro I see is it a bear market bounce or a new trend? Well, if the conflict was coming to an end, we could argue it may be a new trend because we're still in a conflict situation. One may argue quite comfortably that it's possibly a bear market bounce until we have resolution. For me, within the Central European conflict right now, then I don't want to change my opinion that something new is starting. It's probably more just a continuation of where we were. Dollar yen. This is an obvious one, guys. It's going from the bottom left to the top right. There's nothing more to be said, apart from the fact that this is a conflict trend, right? So be aware of that. It was building before, still going on now. We're going to look at that chart in a second. Finally, the Aussie. Right, the Aussie I've been keen on for weeks and weeks and weeks now. For those of you that heard me talking before, you know that I love this market. You know there's lots of reasons why. We all love Australia anyway. And now the floods have stopped. It's stopped raining and it's back to the normal traditional sunshine again. Autumn sunshine making Sydney possibly the loveliest city on the planet. Yada, yada, because it's all come here, by the way, Leka. We're now getting crappy weather over here. In Auckland, the Aussie market is going to get back to basics, which is they're making tons of money out of commodities and therefore it's a growth story. Therefore the Aussie should go up. Not very complicated. I'm just going to run that by you. Here's some charts. Okay, this is the euro. This is why I'm saying if you believe conflict is either ending or coming to an end very soon, then ceasefire stuff. Okay, then a new trend may start. In the meantime, all it looks to me like is a bounce in a bear market. I'm just going to move on to the next one. That blue line for me is major resistance. This is a little bit of technical analysis here. Nothing more complicated than drawing a line across a chart. Just bear in mind it's held us in for quite some time. And for those of you who are Elliott waivers, right, you can see a minor ABC corrective move straight in there, which is the last three waves. For those of you that are thinking that this is looking at the chart behind me while I'm speaking, some kind of sentiment cycle shift and a higher low, you need at least 8 sessions, 8 periods between the initial low and the higher low to actually qualify it. So this to me doesn't qualify. It looks more like a bear flag / triangle / something or other technical pattern like that. Anyway, point is, not very bullish, still think trend continues. Dollar yen, enough said, right? Lower left, top right. How many higher lows do you need, right? It's a bull market, run with it. Just remember it's a conflict bull market, and so could do crazy things again if there's a resolution to the crisis. Okay, the next chart is Aussie. What am I seeing here? What I'm seeing here on the right hand side, 3 days ago, what did we have? We had a higher low which printed a ring low formation, which then had a significant acceleration upwards. Okay, this is classic, absolute classic, right? Acceleration point bull market stuff, right? Doesn't get any better. Are we going to go back to 72 cents again for some time? Who knows? Most likely we shouldn't get anywhere near it. This is now a market that could be on its way to 80 and above. I'm just going to leave it there. Okay, finally, commodities. This is some stuff well, not finally, but next on to commodities. This is some stuff I wrote a little while ago, actually 8 months ago, right? All of this is completely true now as it stands today. All that's different is that I think now we're seeing we've just had the second major advance of this secular commodity bull market. Okay, really important. Okay, so that's all that's really changed. Underlying this, the supply-demand situation has not shifted at all. If anything, supply is more constrained than it was before, justifying a fundamental move even higher in prices than we had before. As a result of that, trying to take a breath here, what are we thinking? Well, oil has done its second bit, right? If you look, that move that we had started back in December through to where we are now, I consider that to be the second leg of the bull market, or the third wave if you're an Elliott waver, right? So this for me has been quite significant. Does this mean the end of the oil market? I don't believe it does. Do I think we're going to consolidate for some time? I absolutely do. Wow, it's been pretty crazy out there. We've got implied volatility of 80%. Okay, that means for those of you that don't know too much about the oil market, normally it's at 30%. To go to 80% means you have some crazy price moves. And we know what crazy price moves in. That big red line that we see about a week ago was $22. That's a whole year of oil movements seen in one day. Absolutely nuts. You go down to a 240-minute chart, it happened in like a 4-hour period. Completely crazy. Welcome to the world of crazy. This is what happens when you're trading a conflict market. So that's why, as I stressed with Ainslie when we had our session a little while ago, I said you've got to manage, and we both said you've got to manage risk in this environment. If you're trading dailies, you're probably trading the wrong chart. It's not short enough. You've got to be on hourlies or 240-minute charts, okay, if you're gonna make any serious trades. Otherwise, your stop loss is what, $30? Well, that's insane. When we look at gold has been boring for so long that everybody went to sleep. I don't think anybody had a gold position for months, right? Months and months and months. You know, certainly the market didn't. Collectively, gold positions in the ETF GLD were the lowest they were for some time, until that big day about 3 or 4 weeks ago. I can't remember when it was. I'm going for 5 weeks ago now, when somebody bought an enormous amount of gold, like to over 20 tons of gold in one session. Right, to call the market makers short. What they did with that was demonstrate the fact that maybe they saw something coming which none of us could see, or maybe they just took a chance that things were going to get rough. The big question I have with gold is twofold. Number one, if it was a really flight to quality market, why isn't gold $500 higher? Okay, and the second question is, what next? Well, the seasonals, the cycles, they're all topping out here. I see gold as consolidating. I don't think we're going to collapse. I see it as consolidating. This is normal if you believe we're in leg one of the secular bull market for gold, like I do. So here we're seeing now a new market unfold. Stop loss for all of that is 1700 something or other, right? But until we get down there, it's a new bull market for gold. I expect to see the market consolidate as we go into this cyclical down movement that we're probably due about this time for the next 2 or 3 months. Then we might set off again. I'm really excited about July and August for gold, because the cycle will line up with what is potentially a short-term corrective move, then leading to, believe it or not, a bigger move than what we've had. That sees gold up to 2,500 potentially. Not calling it there, I'm just saying that's a potential possibility if you're looking at this as a wave one, or the first leg of that secular bull. How are we going to get up there? Why are we going to get up there? I do not know, but I'm just saying it's a possibility, unless we take out the 1700s. So finally, guys, look, last thing I want to talk about is the S&P. There's no chart of the S&P coming up. What I am going to show you is that many stocks, right? There are many stocks in the NASDAQ and in the S&P 500 that have been absolutely taken out to the woodshed, right? So this is what you have to do. You've got to think about on a wider scale, are we at an inflection point now for those stocks? Because they become fundamentally cheap, certainly compared to where they were, right? Couple of examples. This is the Facebook, Amazon, Apple combo, right? The FANG stocks. Okay, this is via an ETF called FDN. If you look at what's happened in the last week, that big green bar down there, that big green bar is the last week. Clearly a reversal. Is it a reversal in a downtrend, or is it a new trend starting? I think time is only going to tell. One thing we know for sure is it's a lot cheaper than it was. So what would cause it to continue to go down would be a real recession. You know, sometimes the market predicts a recession, but it doesn't eventuate. I think this may be, unbelievably, one of those times. So what other things are interesting in this space? This is Cathy Wood, one of my favorite bull market investors. She made a lot of money for her investors with her ARK fund during 2020 in the pandemic run, right? Something crazy. I think she's earned about 25% per annum since she started the fund, right? Not so recently. So this is a market, that a fund that went up, and it's called ARKK, the ARK fund. It went up to over $160 back in tail end of, when was that? The beginning of 21, right? Since then, it's been in a bear market. Where's that bear market taken it down to? Well, last week it traded 53. Okay, 160 to 53 for a fund. That's not a stock, it's a collection of stocks. So I'm saying some things out there are so cheap, you've just got to go, well, actually, do you know what? Okay, so that's why I'm looking at things like this as being a recovery play for the time being. So we're moving out of that safe area back into the slightly more risky area. Maybe that's an asset allocation decision you could think about. Anyway, I just wanted to share those things with you guys. Paul, that's it for me. Just an update, a quick scoot around for what my thoughts are, and that's pretty much it. So thanks, guys. Any questions on that, please shout. I haven't seen much in the chat from anybody, but I will now pass over back to you.
Cheers, Julian. Thanks for that. And great to see so many people in the room for the update today, and I'm sure for your macro market update earlier. Remember, if you're looking to join Julian, he does his macro market update on the third Sunday of the month and comes in to join us the same Sunday. Different members of the team each week. Julian also for Access to Wealth graduates exclusively for the first Sunday of the month. Thank you very much for the session, Julian. It really is a time of don't you love it when markets are interesting? Markets right now are interesting, right?
Definitely interesting.
Cheers, mate. We will see you in a couple of weeks. Thank you very much for your contribution once again. Now we're going to talk trend trading with Leka. This again is a market for us where there's a real need to get clear about what's trending and what's not trending. Because if you can get the trend, if you can get the starts of trends and the trend in markets like this, there is great money to be made. Leka, what's happening in the markets? How do you see it?
All right, I'm going to show a couple of charts. Let me just do that. Let's see. All right, we're going to start with GBP JPY and what I'm seeing here. At the moment, on the monthly chart, we have been pretty much going in a range. So I know you're talking about trend trading, and I normally do basically trend trading, but at the moment, this is just a lovely opportunity that might present some setups. So what I'm looking at is trading either between the range, because there is enough room on the 4-hourly, or outside. So when we have a look at the weekly, this is the trend that we're going in. We've had a couple of rejections at the top. So I'm looking to see what's going to happen at the top of that range. Are we going to have a reversal and a look to short, or is that going to go above and continue the trend upwards? So here we are on the daily. Now we're not quite there yet. We haven't touched the top of that range, but in the past, when we touched the top of the range, it took like 6 days there. This is on a daily, and around 6 days there as well to reverse and come back down. So let's say we do get a touch, I would be watching, you know, a couple of days, 6 days, and let's see, is there going to be a reversal at that point, or are we just going to keep going through? So this is an area of interest. On the 4 hourly, I'm looking for a double top or a lower high if it's going to come down. Otherwise, just continuing the trend above and retest above as usual. Now, similarly, Euro JPY is in a similar position. So on the monthly, again, ranging between those two values there. On the weekly, getting towards the top. So here again, I'm looking at what is going to happen. If I'm going to trade it as a range, then I would be looking at the stochastic in addition to the price action on both of them. Now, because both of them are highly correlated, so on my correlation here, GBP JPY and Euro JPY on the daily, 92% at the moment, and on 4 hourly, 97%, means we need to manage our risk. So either entering the setup that occurs first, or if we're going to enter both, managing the risk, halving the risk for each, so that we're not in the same trend or same direction for both of them at the same time. So that's what I'm looking at there. And the other one is Euro GBP. The Euro GBP on the monthly, I see this channel going downwards. Weekly, again, this shorter trend going downwards very slowly, but we did have a weekly pin bar. So high test bar, rejection of the top. So I'm looking at short on this. On the daily, we see that we are at the moment in this range at the top of the channel. So I'm looking for any pushback from the top to look for short. On the 4 hourly, here, what I'm looking for, either some price action at the top of the channel there. So it would probably poke above, just like that, with a close below, but in the top third. And then there would be enough room to go at least 1 to 1, 1 to 2, if you're going to do the range. Otherwise, just wait until the price action goes below and then take a short position from there if there is a reversal in this area there. So that's what I'm looking at. If it does continue above, then I would be looking for a price breakthrough first, a couple of closes, come back and a retest there. So that one. Let's see, on the daily, we have had, also when we at the top of the range, we have like about 10 candles at the top there. Here we touched the range, let's say maybe around there. So we need, at the moment we have about 3, so another 7. So it's not something that might happen quickly, but it's something that I'm going to be looking at this week and next week. That is about it. Let me just have a look. What else did I have? Oh, I was going to have a look at the news. So in terms of any of the high impact news, I'm looking at Wednesday. So 6 p.m. This is Sydney time, by the way. So just adjust. And 11 p.m. for the GBP pairs. Obviously, I'm looking at couple of the GBPs. So that might have high impact. So possibly trading either well ahead of that or after those news finish. So those are the things that I'm looking at today. And this week, and yeah, possibly next week if the setups don't happen this week, we shall see. That is all from me.
Cheers, Leka. Really cool. Do you have the correlation hot list? Do you have the address for
that? Sure. Yeah, I can put that in the.
Could you put it in the chat for us?
Yeah, I'll put it in the chat. Yeah, sure.
Cheers. If you're watching this on, I'll get Maya to pass that out. So we'll have it in the Zoom for those live in the Zoom, and the Zoom is busy. Good to have you guys all with us. And for those that are watching this live on Facebook or Twitter or YouTube, I'll ask Mike if she can post it into that those areas for you guys as well, so you guys can see that. I really like the correlation hot sheet there, Link. I think it's something that traders need to be more aware of, particularly as you were saying. You don't want to be in euro, yen, and pound yen because all you're really doing is taking one position twice. You know, they are too correlated to be in those things. So nice to see, and interesting to see the price action you're looking for in reversal. It's very detailed. I think that a lot of people just look for a break and a retest, the bars above, the stuff coming back. The patience for that to unfold into a genuine setup as opposed to just a little pattern. Really nice to see. If you're trading at home, that should really, really help. Thank you, Leka. We'll see you back on the third Sunday of April, right?
Yep. Thank you. Thanks, Paul.
Cheers. Thank you. Next up, we're going to go US dollar. Next up, we're going to go US dollar hunting, and I'm trying to find my link to that. So I'm just going to see if I can do something here to make it pop up and let me know where it is. I'll do
all right, traders.
that. Then I'll see if I can share again. Sorry about this, guys. It just doesn't appear to be on the list to pop up, which it should be. There we go. Got it now. So Orlando is in El Salvador, and obviously as such, it's we can't get him in live. It's the middle of the night there. He trades some pretty weird hours as it stands. So he sent us in some analysis on the US dollar. And again, in times where you're looking for macro markets and at times when you're looking for trend, the US dollar is often a leader in what's going to happen. So you need to keep a really good eye on the US dollar and what's going to happen here. Rightio. Let me just share that again because it'll want me to share the sound. Play.
Are you Trader O here? I hope you had a great trading week. Why don't we talk about the USD? What I'm looking at on this market. So to start with, if you notice on the bottom of my chart, this is the 1 hour chart on the DXY, the US dollar currency index. And well, price has been trading inside of a non-directional range for the entire month. Actually, if you notice, we started trading this inside of this range on March 4th, and the upside has been capped by the 99.50 level. Now, right now I do have one US dollar loan that I took at the bottom of the range. Well, the main reason is because the bottom of the range is actually February highs. So this is a big level that is capping the downside on the USD. Also, I am looking for longs and longs only because if we look at the higher time frames, this is the daily chart on the DXY. We are since the bottom of May 2021 in a massive bullish structure. Now, the 96.70 level, as you already know, is a massive level historically. I'm going to quickly show you again to remind you. Let's go to the 2-week chart, and as you can see, it has been pivotal since March 2015. And if we go further back in historic price action, you can see that it was also pivotal from June 1997 till August 2003. I'm sorry. So let's go back to the daily chart, and what I'm looking at here is the DXY a little bit overextended, testing the top of that bullish structure, and the downside being capped by those February highs. So if we go back again to the forward chart, also what I'm looking at here is a possible breakout of the, let's call it no, this is the immediate structure, which is this kind of a bearish channel. We could call it actually a bullish flag. And again, my longs were at the bottom of that range right here. So I'm still holding those longs, and for next week, I'm looking at longs also, right? Depending on how well the market opens, but definitely looking at adding to my long should price break with this immediate key level, which is this week's um, weekly pivot and this previous lows, this previous base that was massively rejected with this candle. This, I think, was during the FOMC day. And I'm sorry. And to me, anything above the 97.80 level or the bottom of this range is still very much bullish. Now, should price break with the 97.80 level to the downside, I will not look for shorts. My whole bias here is very strongly bullish on the DXY, and should price break to the downside, I would wait for price to retest another key level, right, which I'm going to show you again on the 4-hour chart. Um, yeah, which would be this previous pivotal level, right? I'm always looking for um, key levels in historic price action where buyers have jumped in this market since my bias is long. So here's my plan for next week. Should price break with the 97.80 level, I will look for longs around the 97.20 level, right? And if not, if price continues its bullish move from Friday, I will look to add at the break of the structure and above the 98.80 level, right? So have a great trading week and good luck.
There we go. We hear from Julian on. We hear from Julian today on macro market overviews. The man's always a genius. And look, one of the great things about watching Julian, I really encourage you to be aware of this, right, is that Julian is always in front of the market. So Julian was calling the Aussie up a month ago when no one else was. He's always in the front. You just got to sometimes let that stuff play out so you can really catch it. And he is just always in front of the market. Amazing how he can do that. Leka talking about trend, in this case, particularly talking about a couple of ranges, the pound yen and the euro yen, and the possibility to range trade those, and Orlando coming in and doing the US dollar. Next week, I'll be joined by Geoff, George, and Ash. We will have, I think, Ash in live. I think Geoff is on video next week. He's got a function in the evening, and George will be by video because he's coming in from Johannesburg, and again, the time zone doesn't work. I'll be here as well next Sunday. We'll see you guys then. Thanks for staying with us. Remember, each week what we're looking for is what comes before charts. What gives us that little bit of information which picks out the charts we should be watching, right? What's the thing that just going to charts and looking at charts is a nice way to trade, knowing which charts to look at to find opportunities, because you've got sentiment, you've got macro markets, you've got fundamentals, you've got trend, you've got fundamentals, seasonals, COT. All of these things can give you an idea of what should I look at to make sure that I'm looking at the most likely peers to succeed for my method of trading. That's what we're really doing on Sunday. We're trying to give you a look at what you could be looking at for the week ahead that will work for you during the week so you can focus on the ones where the most profit lies for you. That's the habit you're trying to develop over time. Always a pleasure to share, Alan. Thank you guys very much. Amazing numbers in the show today. Great to have somebody live. I'm sure we've got even more on YouTube, Facebook, and Twitter. Great to see the show going so well. Thank you guys, and thanks for the thank yous. And we will see you guys next Sunday. Thank you.